All right, guys. Good morning. Good morning. Hope you guys are doing good today. Let me know if my mic is loud enough. It should be good. But we got some news coming out today. We got GDP data, jobless claims, unemployment. Hope you guys are doing good. Going live at 8:30 Eastern Standard Time. And yeah, we got Apple up a little bit on the day. NASDAQ is down. Look at the NASDAQ. It's down to 24,650. We can see the previous close on the NASDAQ was all the way up there at 24.7s. So NASDAQ down pretty decently on the day. Apple up. Nvidia is red as well. Look at Nvidia. Nvidia is trending red. The VIX is higher on this bearish action this morning, leading into GDP and jobless claims. Microsoft is down. Amazon is down. Bitcoin is red as well, down to 111s. Gold all the way down to 37s. So mostly red this morning in market news. Yeah, the PDT rule is probably going to be changed. Great. It's kind of what's... Yeah, so the White House tells agencies to prepare for mass firings ahead of potential shutdown. That's going on. Crypto assets are down. Of course, Bitcoin's down to 111s from 113s. FINRA drops the rule. This came out last night, but FINRA drops the rule that traders need 25,000 minimum balance to do frequent day trading. Makes it easier for smaller investments to trade often. I think they're waiting for SEC approval, if I remember correctly. Under the proposed rule, traders would no longer be bound by a $25,000 balance. Instead, their maintenance margin standards apply to intraday exposure. Usually it's like 2,000 needed for a margin. You know, I've been a big, opponent of the PDT. The PDT rule is ridiculous. Like it makes no sense. It causes traders to lose more in the beginning. Like the way I've always described it, the analogy I always use for the PDT rule. And the PDT rule basically says you can't day trade more than 3 times a week if you have less than $25,000 in your account. That's basically the PDT rule. It's called the pattern day trading rule. It's absolutely ridiculous, because what they're forcing new traders to do is trade with $20,000+. Like, that's like forcing a new driver to drive only a Bentley. Stupid. It makes no sense. And I think you have to understand, like, the banks want to sit on your money longer, of course, right? And that's what they're doing. They're trying to earn a little bit more interest. And so, yeah, this rule we should have gotten rid of this rule a long time ago. I'm not even sure why it's still there. But yeah, today we got GDP data, quarter 2 GDP, 8:30 Eastern Standard Time, in a little bit over an hour. It's expected at 3.3% annualized. Previous quarter was negative 0.5%. We got durable goods dropping at the same time. Expectations are negative 0.3%. Previous it was almost negative 3% at 2.8% negative last time. But negative 0.3% is expected for durable goods. Jobless claims, a real-time look at the labor market, expected at 233,000 today, 233,000. Tomorrow we got PCE. We'll see what that looks like. Yeah, there was a couple glitches, so just be careful there. We'll do a poll here. It's today's quarter 2 GDP. Or actually, we'll do today's jobless claims. Show higher or lower unemployment filings. Higher or lower. There's the options. Yeah, Nasdaq's flushing down here. It's looking weak right now. In other news today, Intel is up about 4% after reports it's exploring a tie-up investment with Apple. Oracle is down about 2%. They announced a issuance of $18 billion in bonds, possibly to support AI infrastructure. They're down to 301 right now. Lithium Americas is up about 24% on news it may get U.S. government involvement. Unicure is up. Open Doors up 7.5% after Jane Street investment back up to 870s. A lot of people have been talking about Open Door here. Oil is a little bit higher this morning. Actually, oil is a little bit lower. It's at 64.60. BlackBerry provides updated Q3 adjusted EPS. BlackBerry's still around, man. Surprising. Yeah, BlackBerry's down on this news. Slightly. Went up a lot, and then it's down a lot. Starbucks approved a restructuring plan. European Union's Trade Commissioner Šefčovič says he met with U.S. Trade Representative Greer and adds that implementation of the U.S.-EU trade commitments are on track. Next focus is jump-starting the strategic collaboration on steel. Came out earlier this morning. Really, this was about an hour ago. We'll put a timer up as well here so we can watch it. Let's take a look at yields, expectations for rates. 10-year Treasury yields sitting higher than they were yesterday, almost at 4.2%. We're at 4.166% for yields, which shows like a little bit of a higher interest rate sentiment moving forward. You can see yields are elevated today. Markets are down. Markets are waiting on jobs data. We have CME unchanged still. CME group hasn't really seen any swings. Makes sense. We still got some time before the next Fed meeting. So still 92 to 8% likely, and we'll see what that looks like. I could try a test order here. Gold dips down, maybe I'll buy it if it lets me. But bid and ask orders. Yeah, it doesn't look like bid orders are getting filled. You got to mark it in and out right now. Market orders are working. So we just mark it in this pretty small. I don't mind this buy right here either. Down a lot, maybe we'll down back up. All right, I'm gonna take half off here. It's early. I'm taking small trades right now. We get 650 up there. That's what I kind of want, but there we go. Let's go and cut it right there. Got 644. That's okay, close enough. Quick little scalp. Thought we might bounce short term. What's up, Rob, Ruben, Thinker, Faye, Ryan, Brian, Melody, Ahmed, Crypto, Trades, Jack, Alex, Alyssa, Lopez, Trey, ADHD, Ace, Andre, Chris, Alex, Farmer, William, Ray, Rick, D, other Brian, Futures. What's up, guys? Good morning. All right. Yeah. So I probably could have gotten 650 here. Is what I think about. Gold's still pushing higher. I might buy gold if we get a dip, but it could be too late as well. the most overvalued stock to you of all time? I mean, the all time makes it a different context. Like, the all time would imply that, like, you want me to include failed, like, stocks that are already failed, you know, or do you just mean what's the most overvalued stock right now? Those are both different answers. Enron probably be the most overvalued stock of all time, right? Enron, there's probably a couple different examples of, but if we're talking about right now, I don't know. Hey, thank you, Ahmed. I appreciate it, brother. Thank you, sir. I don't know why we're down. See, I wanted 650 here. Look, we popped right off of 650. I also kind of want to buy the dip in gold just because gold pulling back today, but it's not down enough anymore. I think I would need a larger pullback to like 775 or something. Again, the VIX is elevated. We put a timer up. GameStop at $500. It was weird. Like, so the GameStop thing, I've told this story before. But the GameStop thing, excuse me. The GameStop thing, like, one of the things that grew my channel originally was GameStop. I streamed it. I covered the squeeze. I was holding GameStop. And what happened is that GameStop went to like $500 a share. And right around there, I don't know where it was, but right around there, I didn't know the community would get mad if I sold. You know, so like I was covering the squeeze and I was in it and I was waiting. And then it got to 4 something a share, 5 something a share, whatever it was. And I sold. You know, and I told the street, and I was like, hey guys, I'm out. Like, I don't know if it's going to go higher than this. And they all turned on me. They all got so mad and were like, you're not a true believer in the movement. And then it ended up just coming right back down and never getting anywhere close to that again, you know. But like, they were mad. Shame on them because it never got any higher. I'm not gonna prop up a stock just because, you know, I'm a huge wimp. We get up to $500 a share on a worthless, you know, asset at the time. I'm selling, you know. But yeah, they were mad. They got upset. I wasn't expecting it either. I was like hanging out, you know, like those were my first streams of having like a couple thousand people there. Now we hit that every week usually, but like that was like the first couple streams I got with a couple thousand people there. To me, I was like, man, this is great. And then AMC came along, and I was never really a believer in AMC, right? AMC had too large of a float to squeeze, and movie theater dynamics were changing from 2020, and I just didn't like it. And so then they didn't like me because I didn't support AMC, but AMC wasn't the same as GameStop. Yeah. All right, guys. So gold down, oil down, Nvidia down, Nasdaq down, VIX up, Microsoft down. Can't remember if I was in AMC. I might have been. I think I was in AMC for a while, but I didn't lose much on it. I might have been in it for a couple months. All right, so looking at our poll numbers, 56% think higher than expected. Jobless claims 44% think lower. It's been a while. Those are fun times. I used to do push-ups for $1. I used to do push-ups for $1. If you donated $1, I do push-up for it. You know, one day I had to do 600 push-ups. Good times. Capitalism. Thriving. 650 is the level. So we could have sold here at 650, which is what we talked about. Gold's still out edging higher though. Again, Nvidia's breaking down. So Nvidia was over 180s, if you guys remember. It got kind of close to all-time highs. It didn't really hold though, and it's now back to 170s. A lot of the drops this morning on microchip, drops. If you look at AMD's down to 158s. If you look at MU, it's down to 158s. You look at Supermicro, it's down. Google's down. Apple is up. Apple's up slightly. Yeah, ETH, Bitcoin. Bitcoin's down to 111s right now, so it's not looking the healthiest either. Yeah, it's probably fine, but you never know where it's going to dip to. All right, so we're getting some sideways chop action here. Stock market extends 3-day losses to 2%. Yeah, so Powell's been kind of flip-floppy, to be honest, in his sentiments. And we haven't really had any data to come out. Like, we had the Fed meeting last week. He said he was one way last week, and then he was a different way Tuesday this week. So it's been a little flip-floppy, in my opinion. But yeah, one of the things, like, I remember somebody yesterday telling me we were going to bounce, right? And maybe we do. I think the longer you hold a long bias, the more likely you are to be correct. Sometimes you might have to hold that long bias for 10 years until we go green, but I digress. Back to the point. But yesterday, somebody's like, we're going to rebound yesterday, they said. And their logic, I think, was like, we haven't had 2 losing days in a row for X amount of time. The problem with that thinking is you act like just because we haven't yet, it's not going to happen. We've had two losing days back to back, obviously, but in a certain period of time, we haven't, I guess. And that made them think that we were going to bounce back yesterday. It's inevitably going to come, though. Like, eventually, we are going to have 2 losing days in a row, 3 losing days in a row. It's very, very possible. And I think yesterday we did. Yesterday, let me look. NASDAQ. Let me put a daily chart on the NASDAQ and see what that looks like. Yeah, so we did have 3 losing days in a row as of now. We're right on the day. I gotta stretch this out a little. NASDAQ consolidating down at these levels. Do you mean trading view? I'm buying on the dip and then go up and have some profits but never sell, then everything goes back down to 0. How can I sell? What do you mean everything goes back down to 0? Yeah, I mean, a lot of people think we're in a bubble anyway, so maybe we could correct sometime soon. I really don't know this time. This time's too ambiguous to me. Like, we have some stagflation like scenarios, as well as, but we're also close to all-time highs, and you know, we don't have the weakness in the labor market yet that really is gonna freak people out. I would say not yet. We need some time. All right, let me put a timer up. All right, here's a timer for GDP and jobless claims numbers coming out in 50 minutes. I don't know about GDP. It's expected at 3.3%, but we did have some payroll revisions during May and June, which is quarter 2. And so if those payroll revisions somehow like, which is unlikely, but if they somehow bigly affect GDP, we'll see. See what jobless claims look like as well. Those are important also. HSBC says the S&P 500 could rally to 7,000, a 20% surge by the end of this year. It could. It could also not do that. Russia is going to impose a ban on diesel fuel exports for non-producers, according to IFX, or extend gas exports ban until the end of this year. Yeah, again, we did have Seth Chopik said he met with U.S. Trade Rep Greer, and that implementation of U.S.-European trade commitments are on track, he says. Yeah, I saw that. I don't know what Raja was thinking. I'm used to not pronouncing the, yeah. But I don't know what Raja was thinking. Is it Raja or Raja? I don't know. I don't know what Quentin Jackson's son was thinking. Honestly, I don't know what he was thinking. To be honest, though, like, it's not that I'm defending him, but if what they said was hit him as hard as you can a couple times and we will pull you off of him when the time is right, which I've heard different rumors circulating about that's what's going on. If that was the case, which again, I don't know if it is, but if that was the case, I think it was a little bit more understandable because they were supposed to pull him off. And they didn't. Now, he should have been pulling those a little bit either way, I think. And he also should have recognized that it's part of the act that they're doing. He can't get offended by somebody trying to like role play in wrestling. Like, he can't get offended by that. And I think he did for some reason, which is kind of wild. Either way. I don't know. I don't know enough about the situation. Because like all the analysts saying there's going to be a downturn in the fall is coming true despite rate cuts. Well, I don't know. We're at all-time highs. talk about Rampage Jackson's son. Yeah, Bitcoin down to 111s. Silver up. Nasdaq still flushing down here. Silver up. Yeah, silver's up big today, and this is in a day where gold is red. I think, right? Here, hold on. Daily chart for gold. No, gold's green on the day as well. They're both green, but silver's much more green. Like, let me check this. I'm gonna have to zoom my screen out a little bit so you guys can see all of these charts. Like, add this previous closing price. Yeah, so I mean, gold's green on the day too, but gold futures are at least. Look at the Nasdaq still flush here. Wow. Fed's Moran says others on the Fed are more concerned about tariffs driving inflation on Fox Business. So this news just came out right here. Yeah, so Ty, that's what Pawn was saying this morning, is that some of the limit orders aren't working. You have to use a market order this morning. I'm not telling you what to do. Not an investment professional, not liable or whatever happens. But from my understanding right now, limit orders are not working this morning. I'll give you guys an update when I get one. But understand all the stuff on screen, not an investment professional. Yeah, but Moran said they're basically worried about tariffs driving inflation on Fox Business. Apple now technically red on the day. Nasdaq still breaking down. We got 45 minutes. So GDP and jobless claims come out. 63% think we're gonna have higher jobless claims than expected. Fed's Moran says I see shelter inflation coming down in the next 6 to 12 months. Said tariff revenues pouring in are driving down the neutral rate. We have a decent shot at 3% growth for the second half of this year. Tax and regulatory policy changes boost potential growth. I'm probably more optimistic on growth than many at the Fed. Economists need to be humble about expectations for AI. Others on the Fed are not accounting for the population growth shock due to immigration changes. I don't know. It's definitely bear time this morning right now. Bears are out. I'm gonna see if I can buy at 24.6, but we're dropping fast. Looking at 24.6 down here. Might bounce a little bit earlier than that, but yeah, I'm still gonna look at 24.6 if we can buy that dip. Yeah, I mean, it's always buy the rumor, sell the news pair. Like, you got to understand, one of the things, like, you have to understand with all of this stuff isn't just the market pricing different things in. Like, the CME watch tool is just pricing in bond movement. Like this. You know, bond prices move things. You know, the bonds market's big. And you got to understand, this is like markets pricing things in. The 10-year yields go higher, market pricing in less rate cuts. 10-year yields go lower, market pricing in low, you know, more rate cuts or higher cuts or earlier cuts or whatever. Same thing with this. This is the market pricing in things. So right now, the market's got it priced in 92 to 8% likely that we're going to cut rates 25 basis points next month. And again, this is just the market pricing things in. The VIX is now over 17. It's still pretty low. Like 17 is not necessarily high if you look at it, but it's getting towards the top of the normal range for the VIX, I would say. Yeah. Right, exactly, Ty. That's what I like using micros for. Yeah, I think today's GDP data is relevant. Again, we got GDP Q2, GDP jobless claims. We got durable good orders as well. So we got durable goods, jobless claims, GDP. Goolsby speaking in 33 minutes. So Goolsby's going to start speaking about 33 minutes, about 10 minutes before the data comes out. So in about 30 minutes, we're probably going to get more volatility coming in the markets. We're going to have wholesale inventories, durable goods. I got another black eye here, guys. I don't know if y'all can see, but I do have another black eye right here, unfortunately. Like my 5th one here. I'm still looking to buy 600s right here, see if we can. We're down close enough to it. I'm going to start adding to this position here. Maybe add 2 to 3 contracts into it. Green on the day so far. I'm going to add a little bit more. I have to use market orders right now on Top Step. Limit orders aren't working this morning. All right, I'm gonna take half off there. Okay, we're scalping, but we're got a beautiful bounce here. Yeah, limit order's still not working. That's okay. I'm just gonna get out there. Start building up a cushion on the day. Yeah, it's not a big one. I don't think y'all are gonna be able to see it very well. It's very small. Wait, here it is on this end. Yeah, you can't really see it. You can kind of see it. It's right here. Oh well. Yeah, look right here. Look at NVIDIA. NVIDIA down to 175. So NVIDIA, like right here, dropping down. We got the bounce right here, and this is why I love whole numbers. Like, I love extension into big whole numbers, because a lot of the time we're at least going to get like a slight exhaustion bounce at these levels. Maybe we bounce higher. I don't know where I got the black eye from. I mean, I'm pretty sure it was at Jiu-Jitsu last night, but yesterday morning actually. But I don't know where I got it. It was somewhere. I probably got headbutted. Happens. When you train, there's so much adrenaline going that you don't really notice it until later that day. Hero's the one that told me about it. I didn't even know. Again, it's probably like my 15th one this year. But I look tough right now, though. That's good, you know. All I need is cauliflower ears, and I'm set, you know. Yeah, market orders just work for me. I've been in and out of multiple different positions. Market orders are working for me. All right. Bankers, bro. Bankers reaching out to me. They're saying, quote, "Hi from blank bank is checking in on your well-being and offering support for financial needs you might have." Oh, what a nice guy this man is. Get out of here, bro. All right. CNN Brazil reports that Brazilian President Lula is going to discuss critical metals plans with the United States president. Yeah, limit orders, guys. So again, they're down today for some reason, but they'll be back up, I'm sure, pretty soon. But limit orders, the logic of these orders is they had like, okay, a market order is supposed to fill you immediately at the best possible price, but immediately, right? Like this is a market order. Market order, there might be some slippage. Immediate price fill though. It's supposed to fill you at the best possible order. A limit order basically says you have to fill me at this specific price or better, you know? And so it's not necessarily immediately, it's instead waiting for said price. That's limit versus market. I should have stayed in that long position. $37 minutes, 36 minutes left. And GDP, jobless claims, unemployment. Moran says there's no material evidence of tariff-driven inflation, but that seems to be holding up others on the Fed. He said, I want to get a lot closer to neutral in the next 6 months. I think policy is 150 basis points to 200 basis points too restrictive, too high, basically. He sees shelter inflation coming down in the next 6 to 12 months. The long-term response to the recent Fed rate cut was muted, though, but do expect them to come. Longer the Fed stays restrictive, the greater the economic risks. You know, we have decent shot at 3% growth. So yeah, basically, Moran seems to be. Was Moran the one they appointed recently over the other one? I think so, right? So Moran was planted in there, not planted, but Moran is going to be dovish, right? Is that correct? I'm trying to make sure this is correct. I'm pretty sure that's right. If I'm trying to remember. Moran's the recent. Yeah, Moran's the new one, right? So he's going to be dovish regardless. And I don't even necessarily disagree with him here, just to clarify. But he's going to be dovish regardless. No, the bank that sent me the email, it's a small bank I don't really use. I don't trust, you know. Yeah. You know, 150 to 200 basis points is 1.5 to 2%. I don't know. I don't know if I would. It's somewhere in the middle. I think it's certainly a big push to bring it down another 2%. It depends on what the labor market looks like. It really does. Like if the labor market starts to turn deep here, then the risks are going to go much higher towards recession risks, you know. And so it really depends on what the labor market looks like. I think tomorrow's PCE inflation data will tell a big part of the story, whether inflation is still elevated. If PCE comes in hot, that's really bad. If you want rate cuts, especially, that's really bad for an easing cycle starting. That's really bad for, you know, yields are going to start popping up higher. And so, yeah, 25 basis points. I'm okay with 25, 25, 25, which is 75 basis points for the rest of this year. It's all a balancing act, but yeah, 2%. It depends. I'm okay with being data dependent, you know. Yeah, I'm okay with data dependent. I'd rather just wait. Yeah, here's the Top Step link if you want to check it out. Or actually, that's an old link, actually. I got to change that one. Here, I got you guys here. I'll put the link up if you want to check out Top Step. Great way to help support the channel. No PDT and features. You can day trade the S&P, NASDAQ, Dow, Russell, Gold. $50 a month is what the base one costs. You pass it, you get a 50K funded account, 90% split. They pay out millions, fund thousands. Just a great way to learn how to day trade. And most day traders lose. Risk is $50. Not the end of the world if you fail. Here's the link. Check it out. Hate it. They're a sponsor of mine. I'm biased. I get paid by them. Top 3 most biased ever. Understand all the stuff on screen. Can't guarantee anything. Understand CFTC 4.41. Remember, I might be terrible and have no idea what I'm talking about and might be wildly wrong about anything I say. Don't copy me. Top 3 most biased person ever. And also, I get paid by Top Step, so I am biased. There's the link. Check it out. I'll put it to the top of the chat. Crypto will crush with equities in a few weeks. Ramsey, you were the guy that said we would definitely have a bullish day yesterday, brother. And I think the lesson here is nothing is absolute in markets. Dude, I've been top 3 most wrong person ever half the time. 70% of the time, I'm the top 3 most wrong person 50% of the time. But nothing's definitive. Nothing's absolute. Only a Sith deals in absolutes. I don't know any other quotes besides that. But it's all good. I'm just messing with you a little bit. What's up, Chef? What's up, Sam? What's up, Buddy? Martin? Farmer? Exchanges are in so much trouble. They pushed altcoins. I mean, you can make predictions. I just think you need, like, and again, it's all good. I get it, right? Like, I have definitely been like, this is going to happen, and maybe it doesn't. But I think you got to leave a little bit of margin of, you got to leave some variance in there. You know, you got to leave some, you got to leave the door open that it might not go the other way, right? Because you don't want to influence people in the chat either. That's what I always try to do. I tell people I have no idea what's going to happen. Maybe this happens, and I think this is going to happen, but it might not. You don't ever want to be like, this is absolutely going to happen, especially if we're talking short-term day trading. Nobody freaking knows what's going to happen there. Variance is so high, it's just unreasonable to say this is going to happen absolutely. And yeah, I hope that makes sense. All right, let me check the logs here. Oh, I said we were gonna dump. Check. You might be right. You might have been accurate. Let me see. Hold on. Maybe it's a different person that I was talking about. You actually didn't say much yesterday. Must have been somebody else. You said we'd have a 3% correction. So yeah, you were actually correct. Maybe it was somebody else. So I retract my previous statement. I might have been wrong, dude. Looks like I was. I'm sorry, Ramsey. I didn't mean it, bro. I didn't mean it. Sorry, dude. We got too many people in the chat. It's hard to watch all of them. Must have been somebody else. I have to go look. Listen, I can admit when I was wrong. Top 3 most wrong person ever just now. All right, guys. There's 8 a.m. in markets. 8 a.m. Yeah, so what I'm showing is limit orders aren't working. You got to use market orders this morning on Top Step, and that includes stop orders. Limit orders especially. So Kelly, what do you think? Gold rally will stop here if dollar retraces? Maybe. I don't know. Yeah, I think today's economic data might move things. We'll see. Oh, this is what you said yesterday. You said typical correction we started yesterday. Today in the morning, up, then down. So you were kind of right, but kind of wrong too, because yesterday we never really were up, I think, right? Just kind of dropped yesterday. It's easier to watch like SPY, I think, in terms of I can see pre-market action show up. Yeah, we just dropped all day yesterday. So you were kind of half right. All right, we're back up to 24,600s here. Nvidia's still breaking down though. Nvidia's been dropping a lot. Apple's flat on the day. Gold is up slightly. Silver's up a lot. That was just 8 a.m. So what happens at 8 a.m. sometimes here, if you look at this, sometimes random orders get filled at 8 a.m. It's when a lot of brokerages open up, so sometimes orders start getting filled there, and you'll see what's called like a phantom order come in up here and then retrace right back down. It's pretty common actually when you look at charts and markets. I'm not going to say it's not a real number, it's just the 8 a.m. scrum is what a lot of people call it. Right around 8 a.m. you get these big, you get like what happens here is like a phantom order gets filled randomly up here somehow. And so all right, we got about 1,000 here already, guys. We got GDP jobless claims numbers coming soon. GDP expected at 3.3% today. And this is finalized third revision quarter 2 GDP. It's called the third final estimate, the third revision. The way GDP works is that first month of the next quarter, you'll get the initial estimate, which is the most variance filled one for the previous quarter. The next one is the second revision, and then the third one with a little bit more updated information, and then the third is pretty close to the final number. All right, that's today. Today we get finalized GDP. Expectations are 3.3% for quarter 2. Remember, quarter 1 was a negative quarter. It was negative 0.5%. This quarter 2, they're expecting at 3.3%. So big differences between first quarter, second quarter expectations here. Now we'll see what quarter 2 comes in at. We also have jobless claims unemployment, which is how many people are filing for unemployment week to week. Expectations there are 233,000. We've seen some big swings in these numbers, and this is all leading into PCE inflation data tomorrow. So we will see. Oh my gosh, dude, I just spilled coffee all over my keyboard, bro. Oh no, guys. What have I done here? Ain't good. I blame you guys. It's your fault. Alright. Hold on one second, guys. I gotta unplug my keyboard and then plug it back in. Hold on. Bear with me. One second. All right. I'm still here. I'm gonna wipe off my keyboard now. Probably got another keyboard here I can use. All right, we're starting to bounce back here, guys. We got 20 minutes before GDP and jobless claims. Ugh. I'll leave it upside down here and just not type for a second. Damn, dude. Top 3 biggest mistakes ever, right there. Top 3 least big mistakes, actually. Amazon coming down. NASDAQ did bounce right at that 585 level. We're back over 24.6s here. And yeah. Great. Coffee is now dripping out of this keyboard. All right, NASDAQ starting to bounce back. Gold still at 37.83s. NVIDIA at 175. And again, we got Q2 GDP data finalized coming out in about 22 minutes, 21 minutes here. Hold on. Okay, we're back. Will the keyboard work now? Are you guys bullish or bearish on GDP and jobless claims data coming out in 20 minutes? Bullish or bearish right now, guys? Honestly, I think the market could go either way. I think market's going to be really weighted towards, if GDP comes in as expected, that's basically flat. But I think jobless claims are going to move things too. We'll see. Bullish on your keyboard. Bearish. Bearish. Bullish on the keyboard. I'm optimistic here, bro. Hold on. I found this in my get it better from Carol. Finish it. There we go. All right, let's see if my keyboard's back here. All right, keyboard's back in service. All right, guys, NASDAQ up. VIX is elevated right around 17s today. Yields are higher as well. Gold is... Google is buying a 5.4% stake in Bitcoin miner Cypher Mining. So we got the NEC's HEATS says China will lose the AI battle if blocked from NVIDIA chips. Again, HEATS said the Fed is moving towards consensus on a one-time price increase from tariffs. U.S. staking companies are about national security. Inflation has dropped sharply. Growth is high. Fox tariffs. On Fox, tariffs only cause a one-off price adjustment. Again, that inflation has dropped sharply. Growth is high. Moran is speaking, or spoke already. But again, Hassan said China's going to lose the AI battle if blocked from buying NVIDIA chips. Carol knits. All right, guys, look at the NASDAQ still bouncing here. Q is back up. NVIDIA's been breaking down all day. NVIDIA was over 180 earlier this week. It's now under 176. So it's been dropping. VIX is elevated into this numbers. So we got about 16 minutes left here. 16 minutes for GDP and jobless claims. Again, expectations are 233,000 for jobless claims, 3.3% for GDP. We also have durable good orders that releases at the same time. Durable goods expected at negative 0.3%. Last time durable goods were negative 2.8% last time. Again, continuing claims expected at 1.93 million. Last time they were 1.92 million. Durable goods expected at negative 0.3%. Last time they were negative 2.8%. GDP expected at 3.3%. Quarter one was negative 0.5%. And again, jobless claims expected at 233, which is slightly higher than they were last time. We also have retail inventories, consumer spending dropping. But we'll watch the full report live here. Go through everything here as soon as it happens. So stick around, be ready. 15 minutes. Yo, what's up, chat? Is it really? It's tough out there? Yeah. I try to be nice to the Door Dashers. You know? Like if the Door Dashers are 5 minutes, if the food is like across the street, I'll tip them $15. If it's like 5+ minutes away, I'll usually tip them 20 every time, no matter what the size of the order is. And I think that's fair. It's a tough job driving around delivering things to people. All right, we're at 24,615s. Yeah, I mean, I would prefer the restaurants to keep the bags closed. Like, some of them will put like a little sticker over the food, you know. But I generally trust the people, you know. I don't. All right, guys. Hey, we're at 24,615s. NVIDIA's still flushing down here. Microchips are down. MU's down. AMD's down. Apple's down. I think most tech stocks are now down here. All right, guys, we got 12 minutes, 13 minutes left. Bro, I had another keyboard in here somewhere. I don't know what I did. I got too many electronics in my house. Done. All right, I found another keyboard here. Give me 1 second. I'm just gonna plug this one in. All right, guys. Hey, we got 12 minutes left until GDP and jobless claims unemployment filings go live here. Just be careful today, guys. All right, we got it up. New computer, the new new keyboard is here. Honestly, this is a nicer keyboard. Those stuff. All right, guys. So Nasdaq is slightly up. VIX is right at 17s here. Right at 17s. Watch Bitcoin test 100K. Maybe. Yeah, cool keyboard. Glows different colors. Works well too. Yeah, Bitcoin all the way down, man. Bitcoin was at, prior to today, Bitcoin was at 113s. It's now at 111. So Bitcoin down, Nasdaq down, gold up, tech down. This morning, again, Powell basically changed his tune, is what did this, right? Like Powell last week was very dovish, acknowledged labor report weakness, acknowledged the risks on the labor market, essentially said that this was probably the start of a longer easing cycle. Now, Tuesday, he kind of changed his tune to the opposite. He now says this was a risk management cut and that it might not be the start of a broader easing cycle. And so markets have interpreted that as hawkish. And, now it's kind of, I would say he was more data dependent than hawkish on Tuesday, but his tune changed a little bit. He was a little flip floppy. Last week we had the Fed meeting. This Tuesday he spoke again. What did you guys think Powell was hawkish or dovish on Tuesday? I thought he's a little hawkish, but data dependent. I would say technically he's neutral, but I thought he's more hawkish than a lot of people expected. And that's why bond yields are higher. That's why markets are a little bit more worried about the labor market now. What do you guys think? And again, I think tomorrow's PCE report's relevant. Today's jobless claims unemployment filings report and GDP is relevant. And we'll see what happens. Perfectly neutral? Yeah, maybe. Everybody relax here. Guys, no need to argue with others. It'll be okay. PCE this Friday is going to be interesting. PCE inflation is expected tomorrow. Again, we got 9 minutes for this data. A little bit less than that, actually. But PCE inflation data expected at 2.9% on the year for core PCE tomorrow, which was what it was last time. A little bit lower than expected month-over-month reading tomorrow at 0.2%. Year-over-year headline PCE expected at 2.7, which is slightly higher. And same thing month-over-month, 0.1% increase expected for headline on both month-over-month and year-over-year. And then pretty similar readings for core month-to-month and year-over-year. Yeah, y'all hit the like button if you haven't already, guys. We appreciate it. We got 1,400 here right now, 1,400 people. You can slap that like button. We got 129 likes. We can bring that up. Yeah, one of the big scary things is he said he thought that valuations in stocks were high. Yeah, look, I'm gonna delete any arguments here with each other. There's no need to do that. Y'all just get along. Listen, I want you guys both to say something positive about the other one right now, okay? You know, be nice. Work with each other. All right. You know? Therapist John. Both say something nice about the other one. All right, guys. Hey, we got GDP data dropping in 6.5 minutes. Yeah, I mean, corrections are healthy. So. All right, we got 1,500 here. Nasdaq bouncing higher here. Let's see about 650. 650 is the level I'm watching here, but of course, like we got data dropping, a bunch of different data. We got durable goods, we got GDP, we have jobless claims, all dropping in about 6 minutes. All right, guys, 6 minutes. And so, again, make sure you hit the live button next to the play button. Put it in 2x speed. You'll catch up to the stream. Hit the live button. Put it in 2x speed. You'll catch up to the stream. Make sure you're caught up. Hit the live button. I'll sound like a chipmunk, and then if you hit the live button, it'll catch up pretty quickly, and you won't be delayed when the data comes out in 5 minutes. Gold elevated ahead of this report. See what happens. Oh. Gotcha. Ugh. Ugh. What a violent sneeze right there. Everybody, we're okay. Don't worry. You know, we're here. All right, guys. Nasdaq still climbing higher ahead of this report. Nvidia bouncing back is part of the reason. Nvidia up to 175.50s, bounced around 175. VIX is dipping down a little bit. Gold's pulling back some. But we have data coming out in 4.5 minutes. Auntie, no. No. We need some good news. Yeah, we'll see what we get. We will see. Yeah, we do need some good news. Honestly, the labor report showed bad news mostly. Jobless claims were high last time, right? No. Jobless claims were, I think, were pretty flat actually last time, if I remember. Yeah, so jobless claims last time showed up at 231,000, 231K. So we will see what we get here. Patiently waiting for this report to come out. And yeah, we'll see. All right, guys, here we go. We got about 3 minutes left here. 3 minutes. You guys ready? Again, hit the live button next to the play button. All right, previous quarter was negative 0.5% for quarter one. Jobless claims. Also dropping in 2.5 minutes. 233K expected. Previous of 231, right? What they came in last time, 231K. If I remember correctly. Yeah, 231K last time. Again, we also have durable goods expected at negative 0.3%. Getting a little pullback here. 2 minutes here, chat. 2 minutes. I think we can break 2,000 people here. I think we probably will. We'll probably get like 2,200 or so watching this. 2,300, my guess. We appreciate the love, guys. Thanks so much. Yeah, the limit orders are struggling today, but I'm sure they'll fix it soon. Make it right. Yeah, Rounder, hit the live button next to the play button. You might be delayed. Everybody hit the live button next to the play button. Will jobless claims come in higher or lower than expected here? 67% think higher, 33% think lower. We got about a minute left. Are you guys ready? 1 minute left. NASDAQ's dipping down ahead of this report. VIX back over 17s. Moran basically said monetary policy shouldn't necessarily respond to fiscally mandated price changes. I want to act proactively rather than wait for a catastrophe. And the longer you stay restrictive, the greater the risk. Earlier, heading into GDP and jobless claims numbers, it's relevant today. What's up, chat? What's up, Viking? What's up, P? Yeah, but that was the last week, B. All right, guys, here we go. 25 seconds left. Hit the live button next to the play button. We appreciate the love. Thanks so much here, guys. Here we go. This timer's a little bit early. We actually have about 15 minutes or 15 seconds left. Here we go. All right, 10 seconds, roughly. Again, hit the live button. Make sure you're caught up. All right, here we go. And here's the report right now. Jobless claims 218. Jobless claims. Durable goods 2.9%, much stronger than expected. GDP 3.8%. Everything stronger than expected. 3.8% for GDP data. Jobless claims showed 218 versus expected. Durable goods showed 2.9%. All right. 3.8% versus expected 3.3%, negative 0.5% the previous quarter. Jobless claims showed 218. So all of this showed stronger economy data than expected. Again, jobless claims lower than expected, showed less people filing for unemployment. We'll go through this report real quick. The Department of Labor here that just came out. In the week ending September 20th, the advanced figure for seasonally adjusted initial claims was 218, a decrease of 14,000 from the previous week revised level. The previous week's level was revised up by 1,000, 231 to 232. The 4-week moving average 237. But yeah, basically jobless claims stronger than expected, showing less filings. The market's actually reacting negatively to this, probably because it means we're less likely to cut rates as aggressively now. I'm sure yields are moving higher on this report, I'm guessing. Let me see. NASDAQ's actually reacting negatively to it. Yeah, yields are higher now. Not a shock. I mean, the stronger the economy is, the less likely it is the Fed cuts and the higher yields are going to pop. Right? Look at yields go up on this report. So yields are higher. Yeah, yields are higher. Again, 3.8% quarter two GDP. And again, this is going to show less of a need to cut rates. This is going to show less of a need to cut rates, less weakness in the labor market. Jobless claims being lower than expected shows the same thing, less weakness in the labor market. Durable goods 2.9. Wait. Durable goods, I'm sorry, was 2.9% versus negative 0.3% expected. So everything was stronger than expected here. Showing a stronger economy than expected everywhere. I'll put the data on screen so you can see it. But yeah, yields popping on this report, as they would, as obviously. Yeah, quarter US GDP final. 3.8%. Quarter two. 3.8%. Jobless claims. GDP sales final 7.5%. Durable goods higher than expected as well, 2.8%. Jobless claims 218. Less people filing for unemployment week to week. So all right, so the data should be at the bottom of the screen now if you want to see the main ones. 218. Continuing claims showed up, just to clarify, at 1.926. So lower than expected continuing claims as well. We also have Goolsby speaking right now, I think, right? Also, inventory is negative 0.2% versus expected 0.2%. Yeah, tomorrow's PCE is incredibly relevant, important. Originally, sometimes the first move is the wrong move. We just tapped lows of the day. And now we're bouncing back at that level here. Let's watch gold. Gold dropped a lot on this report because, you know, more stability within the labor market is worse for gold, I think. But PCE inflation data tomorrow, 8:30 Eastern Standard Time. Be ready for that. We'll see what that looks like. So, yeah, do me a favor, subscribe. We've had a lot of crazy growth the last few, bit. Yeah, GDP, HEATS, labor. Alright, so we're dipping down here. Let's see if we can gold copy. NASDAQ falling. VIX is at 1712s now. So again, sometimes the first move is the wrong move. Hey, thank you, Reed. Appreciate it. Why are we dumping so much? I mean, I think there's a lot of back and forth. Nvidia has been one of the root causes of it. Nvidia's been falling down. It was over 180s. It's now at 175. NASDAQ testing lows of the day. But bouncing right here, so we'll see if we hold heading into the opening bell. We've had 3 red days in a row, if you include today. So 3 red pre-market sessions in a row. Yesterday was very red. Gold's still falling down. But we've had some red days in a row now. Hey, thank you for the donation, Ramsey. Appreciate it, bro. Thank you, sir. Nvidia is not going to be $20. That's ridiculous. What's your argument for Nvidia being $20? That's a crazy prediction. NASDAQ just cracked lows of the day, trying to hold. Yeah, I mean, I don't know what we're gonna get, guys. If anything, watching this channel, you guys should understand pretty regularly. Honestly, this keyboard's much nicer than my last one. I think I'll just keep it. You guys should understand more than anything, I don't really give out that type of prediction. I don't know what's going to happen in markets. All right, gold right at the previous closing price. This is right at the red to green level for gold. Oh, yeah. Nobody likes to say I told you so more than the internet. But most of the time, like, they're trying to tell it to the wrong person. If I'm like, hey, I don't know when we're going to drop. I don't know what's going to happen. There's always variance. It's not like I'm saying the market's going to keep going higher, you know? I have no idea. I'm just looking at the past and trying to get a read on it, which is what everybody's doing. Nobody freaking knows which way. Honestly, what Matthew McConaughey said in The Wolf of Wall Street is absolutely true. Nobody knows which way markets are going. And I would agree, least of all stockbrokers as well, because stockbrokers are just there to sell you on stocks. You know, I would say economists might know, kind of, but even that's a different game. And NASDAQ cracked lows, but it's not the end of the world yet. Gold rebounded back up. The VIX is doing well from this report. Yeah, I think what we're seeing right now, guys, is what I said before, which is that after the last Fed meeting, market priced in cuts, and now we're seeing some of that pricing in, you know, stepping back, is what we're seeing. I think Powell Tuesday more hawkish than expected for a lot of people. Yeah, Powell Tuesday was more hawkish. And then this data today, I would say, hawkish. It's certainly showing more strength in the labor market, and in order to cut, you need weakness in the labor market. So we will see. But yeah, kind of where we're at now. Yeah, PCE tomorrow is going to be very relevant, very important. Yeah, so they're changing the PDT rule. I heard about that. That's great. PCE tomorrow is inflation data. So if you want to cut rates, you need low inflation. Tomorrow's PCE is coming out. That's actually the Fed's preferred inflation metric, and so you want to focus on it. It's relevant. It's relevant. See what happens, but. Yeah. So we're rebounding a little bit. We're at 586, falling down to 592. Gold's retesting that previous closing price. VIX is high. Nvidia. Let's see if there's another stock driving this down here. So I know Apple's slightly red on the day, very, very slightly red. Microsoft is red on the day as well. Meta, red. Google, red. Netflix, red. Apple, red. Slightly red. Apple's basically flat right now. We'll see what continues to push markets. I would say Nvidia has been the flavor of the month mostly for the last 2 years. Yeah. We crack lows again. We're bouncing slightly after this. I've had a couple green trades. Also, guys, if you haven't already, check out Top Step. Great way to help support the channel. No PDT rule in the futures. You can day trade the S&P, NASDAQ, Dow, Russell, gold, some currencies. Very similar to day trading stocks, commodities. Very similar to day trading blue chips. Patterns are similar. Get you around the PDT rule. It's $50 a month to get started. They give you a 50K demo. If you can make 3K in profit without losing 2K, following their rules, and you want to confirm it all with them, I'm biased because they're a sponsor of mine, but genuinely useful. Confirm it with them. But if you pass that test, they give you a 50K funded account, 90% split. You get to keep your first 10K in profit prior to that split kicking in. If you fail it, you lose $50. So it's the best of both worlds. It's limited risk, similar reward to funding your own account in terms of 90% split. They pay out millions. You can now reset your funded accounts, all that good stuff. Great way to learn. And I'll put the link up. Again, they're a sponsor of mine. I'm biased, but genuinely useful. Here's the link. Check it out. Someone say I'm the top 3 most biased. Understand all this stuff on screen. I can't Guarantee anything. Not an investment professional. I'm not liable if you lose money. Always make your own assessment. Trade smart. Can't guarantee anything here. Understand CFTC 4.41. That's the top 3 greatest plugs ever right there. Well, Q2 is lagging GDP, so it's lagging. So like Q2 GDP is lagging. Yeah, on Top Step, there was an outage. They said we're still investigating ongoing reports on Top Step X. We have isolated the issue to limited bracket orders not filling. In the meantime, you can close if you need to close a position on micro. You need to do so manually here, using market orders probably. NASDAQ testing lows again here, breaking down underneath it. We're at 570s here. 570s. Q still breaking down. Gold still breaking down. VIX edging higher. 1720s. Yeah, we got Q3 initial GDP, which is like what's called prelim GDP, or the initial estimate, I should say. It's the most variance-filled one. It's next month. I mean, I don't know. In 5 years, Amazon's probably going to be over 400. My guess. I might be wrong. Again, I'm going to preface this with I am not an investment professional. Top 3 least financial professional people in the world right now. Don't copy me. I have no idea what I'm talking about half the time. But I would say Amazon is primed to be over 400 within 5 years. Probably. People use Amazon for everything. I think that dynamic's going to continue. And I don't think less than 100% move is unreasonable to expect in a 5-year period of time. Short term, I have no idea what it's going to do, but long term. Speaking of Amazon, Amazon's bouncing a little bit just now. Look at Amazon. Amazon's popping up. Might be some news. China Commerce Ministry announced they're launching anti-dumping investigation into American and Mexican pecans. Woolsby says job market seems to be cooling, uneasy on transitory inflation. Did the odds of rate cuts change? I'm sure they did. Yeah, so odds of rate cuts have been... again, we saw a yield spike, which basically means odds of rate cuts are changing. They are down to now 88% versus 12% for a pause. So odds of a pause have increased, and odds of a 25 basis point cut have decreased here. They're now at 87.7%, just 88% roughly right now. So odds of a rate cut have gone down on GDP jobless claims numbers here. Amazon popping up, NASDAQ breaking down here. I guess the market really wants rate cuts, but yeah, maybe I don't think I'm wrong, but I think it's reasonable to assume Amazon's going to be up at least 100% 5 years, just judging by previous trends, you know. But you never know. Anything can happen. Depends on what happens. You get a market crash, and we got to fight back from that, and everything drops. Then that's a different story, and that's possible. It just depends. Yeah, PC is going to have more influence today for sure. So if you're tuning in today, again, tune in for PCE. Hit the subscribe button. We cover everything live right here. Yeah, rate cut odds are decreasing as we're watching this here. Yields are spiking here too. Yeah, rate cut odds are now 85% likely instead. Nasdaq still falling down on this report. Well, the market thinks it's a good thing because it's stimulative. Nasdaq broke lows again. VIX is now at almost 1730s. Gold's falling. What do you guys fear more, inflation or recession right now? Me in this poll, and that's what the poll would be. You can answer it in the chat too. I'll talk about it. But what do you fear more now? Recessions. All right, so we got the option now. Can't say both. I'm just trying to see what people fear more here. There's the poll if you want to vote on it. Stagflation basically means you fear both, but take a look at yields. Watch the yield market live. Look at yields climb. And here's 830 right here. Yields spiking on this news. See the odds of rate cuts decrease. So far we got 56% that say they feel a recession more full. We have some people saying they fear a recession more. Well, a lot of people saying they fear an inflation more. Who wins and who loses with higher yields? Higher yields is a hawkish thing. 10-year yields, at least, is a hawkish thing. The longer-term yields are a little bit different, but 10-year yields are hawkish. If they go up, it means higher interest rate potential. It's markets pricing in higher interest rates is technically what it is, right? So as you see yields climb, that's the market pricing in higher interest rates, right? And if you take a look at the CME watch tool, you can see the odds of a 25 basis point cut next month decrease as yields rise. So interest rates, and again, here's the pattern. I try to give people this all the time, but here's the pattern. Interest rates and yields parallel, they correlate with each other. Interest rates and yields. Bond prices and bond yields inverse each other. So, right, so bond yields are up, but if we look at TLT, it's probably dropping. Yes, on this bond price. A little bit different. These are a little bit longer term bonds, but that's okay. I'm using it to show you. So yield prices, or bond prices decrease as yields go up. Supply and demand. And again, interest rates and yields follow each other for the most part, especially 10-year, 2 to 10-year yield. So when we say yields are climbing, what we're really meaning is that higher interest rate sentiment is going up. Markets are pricing in higher rates. Or the economists say 10-year hits 5%, the whole global markets go mental. Yeah. That's possible. 5% is high. We hit 5% earlier this year. It depends on what's going on in the Nasdaq and the markets. Yields hit 5% earlier, I think, right? I'm pretty sure they did hit 5% earlier this year. If I put it in TNX here, 10-year. Yeah, and you can see yields spike. Got 4.8%. Last time we were at 5. Markets were at 5 in 2020. Yeah, 10-year yield got up to 4.8%, almost 5% back at the very beginning of this year. It all has to do with risk sentiment here. Like if equities run, people are less interested in bonds because equities are moving, and you know, they're again, the S&P will earn you. At Nasdaq, S&P, Dow, index funds, mutual funds will give you about 8 to 10% a year on average, but it includes crashes, but it's not necessarily consistent all the time. So sometimes you're gonna have big swings to the upside, like the last 2 years with AI booms. Nasdaq did 50% some of these years, and then you're gonna have big failing years, sometimes longer term, where you're gonna drop for multiple years in a row. And so the net effect of that is that the S&P and Nasdaq and Dow and index funds and mutual funds will give you about 8 to 10% a year, right? Which is a very big gain, right? But when they're scary and down, when those are down, people go to risk off investments, which are more like bonds, right? Guaranteed return, CDs, you know, because you know you're gonna get your 4.2% right now in bonds. If you buy it, you're gonna earn it unless you try to sell it early. That might fluctuate, but they're kind of risk-off assets. Bonds are guaranteed by the U.S. government, right? So they're risk-off assets versus S&P, Nasdaq, Dow, equities, stocks, which are more risky assets, but they return better generally. I guys think it starts the bearish market again. Look at the VIX here. VIX gauges volatility. Here's yields right here. If you want to see what yields are doing, you move this decimal place 1 over. So right now this is 41.93. It would be 4.193% is where 10-year Treasury yields are currently at right now. Here's the VIX. The higher the VIX goes, usually it means the weaker the Nasdaq is and the markets are. So the VIX generally goes up as the Nasdaq drops. Oh, y'all can't see the VIX behind me. Hold on. There's the VIX right here. You can see it climbing higher. VIX is up to 1740s right now. 1740s. VIX. So it's high. Higher right now. It's not super high. You can look at like a longer term history of this and see like during the whole Liberation Day thing, it went all the way up to 60. But in terms of general range, it's edging higher here. If you look at this, like here's the general range here right now. Edging higher for sure right now. It's at 1740s, almost 18. But again, as the Nasdaq goes down, VIX is going to climb higher. That's all sign of a bear market. Yeah, but it's so hard to predict, guys. It is, and like you gotta understand. You have to understand that like crashes, bear markets, they're wildly over predicted. If people just simply predict them. They simply just predict them way too much, man. They call them too much. They think they're happening too much, and so they're over predicted. Everybody gets mad if you think that they're wrong, but most of the time the people who predict bear markets and market crashes are I'm not saying that you're wrong here. I mean, we can certainly drop. I'm not saying that because I really don't know when we're going to have a big bear market. Nobody does. I don't know if the bubble's going to burst in AI. I don't know if we're going to downtrend for years. I genuinely don't know, and most people don't know. But every single year, whether we're breaking all-time highs over and over again or we're dipping down, somebody's predicting a market crash. And if you keep throwing darts at a dartboard, eventually you're correct. And some of these other YouTube channels covering this stuff, they're going to tell you the market's going to crash every other week, you know? Most of the time they're wrong. And then they'll isolate a small 1% drop and they'll be like, see, we did crash. And it's like, no, we didn't. And so you just got to understand, crashes are over predicted. When you start understanding that, you can learn to kind of like recognize other edges. Size for sure. Any big news this week yet? Or next week? Yeah, next week we got a whole gang, like an array of different reports going live. Next week we got the JOLTS job report. We got ISM manufacturing and services PMI. We got the non-farm employment change data on Wednesday. Thursday we got jobless claims again and more. And then Friday we have the next labor report next week. We got a whole bunch of stuff going on. whole bunch of stuff. Man, GDP 3.8%. And this is final GDP. Make sure the president. I doubt he will, because this kind of. I mean, sometimes what the presidents do, and again, I'm not criticizing him necessarily, because I think most presidents do use the same playbook when they're marketing themselves. Okay, if GDP and the labor market are strong, they're gonna say, "Look what I have done. Look how strong the labor market is." Right? If GDP and the labor market are weak and inflation starts to slow down, they're saying, look what we've done to combat inflation. Right? So no matter what, they're going to focus on the good thing. I don't know if the president's going to talk about this one, though, because he essentially is really pushing for rate cuts. And the data today doesn't necessarily show. And again, it's isolated data. So like tomorrow's data might show the opposite, and then next week's labor report might show the opposite, right? But again, it's all isolated. But this data certainly shows a stronger labor market and economy than at least for quarter 2. Silver's up a lot today, isn't it? Yeah, silver's at 44s right now. Although silver and gold have mostly negatively reacted to the data here. Here's silver and gold, right? Here's gold. Here's silver. They're both negatively responding to this data. Oil is down as well. So. Yeah, Bitcoin opened the day really red, and I'm sure Bitcoin wants easing, so I'm sure it's probably responding to this data as well. Yeah, Bitcoin's down too. It's kind of flat. Honestly, Bitcoin's kind of flat. Powell's not going to raise rates 25 basis. I don't think there's any scenario in which Powell raises rates this year. I think that's a silly expectation. Maybe I'm wrong. Don't think Powell raises rates this year. All right, so if the Fed Schmid is speaking, he says inflation is too high still, current job market largely in balance, and that recent data points to risks rising in the job market. Rate cut was appropriate to offset risk to the labor market. Currently, the Fed is close to meeting its mandates, but policy must look forward. So we're kind of seeing like similar things. Everybody's saying kind of similar things. Inflation high. Job market okay. There's risks if the rates at restricted levels is basically what they're saying. Although Schmidt is kind of saying the opposite. Rate cut was appropriate to offset risk to the labor market. Bitcoin's still dropping. Gold's still falling. Nvidia's still dropping. VIX still rising here today. Yeah, a lot of people are going to argue stagflation. Yeah, I think something that we're seeing is AI too. I think AI is going to affect the labor market. I think AI is going to affect the labor market. And it already has. So CoreWeave just got an OpenAI deal worth up to $6.5 billion, bringing total value of agreements to $4 billion. CoreWeave just bounced up. It's still red on the day with everything else, but it bounced up a little bit. We also had Goolsby say some job market measures point to more stability. The labor market is cooling mildly, and if sitting government can tell the central bank what to do with rates, inflation goes up. US data came in strong, so the Dixie has gone up to a 3-week high as of now. Dollar index is up. Goolsby is now saying AI adoption by businesses hasn't been as big as you think. Again, Schmid said currently Fed is close to meeting its mandates, but policy must look forward. Rate cut was appropriate to offset risk. Recent data points to risks. Labor market policy is slightly restrictive. which is the right place to be going forward, will be data dependent on monetary policy choices. Fed bank supervision role is important for broader mission. But yeah, we got a lot of Fed speakers this. Counted housing inflation to get the real picture. Yeah, maybe. Yeah, we've got a lot of Fed speakers. All right, guys, we're gonna be day trading live at the opening bell. Just be ready here. Live day trading at the open. A lot of people think the market's going to do good in October. It's called Uptober. Thanks. Yeah, you guys bullish or bearish for the opening bell here? Yeah, we're gonna be live day trading at the opening bell, guys. Just to clarify, we're gonna be live day trading. I did a poll and we asked people, what do you fear more right now, a recession or inflation? 44% said inflation. 56% said a recession. Bitcoin also just cracked lows again. It's almost down to 111 even right now. Oil's falling. Gold's starting to bounce back up a little bit. Options expiration tomorrow. Wasn't that last Friday? Where we had triple wishing day last Friday. Y'all do me a favor. Give me a follow on x.com at beginner trades. At beginner trades. We post all the economic data there as well. No PDT rule in futures. So if you ever want to day trade futures with me, check them out. But at beginner trades. We cover all the stuff as soon as it drops pretty regularly there. Give me a follow. We appreciate it. Help support the channel here, guys. That's all I'm saying. Yeah, looking at the dollar index here, a lot of people are talking about it. Isn't it at 3-week highs? Yeah, look at the Dixie rip up on the strong economic data, U.S. economic data. Yeah, all good. Oh. On saying crypto asset drop deepens ahead of 22 billion options expiry. So more than 17 billion in Notional open interest tied to Bitcoin and about 5.3 billion for ETH are set to expire tomorrow, according to derivative exchange Arabit. So yeah, that's the options expiry. You're talking about crypto. I was talking about last Friday. Market's testing lows again here. Look, Nasdaq just broke lows again. Not quite actually yet. I'm sorry. Tapped lows. Didn't quite break it. We'll see if it does. "20 minutes until the market opens." Goolsby says in short term, what's most worrying is the risk that inflation rises persistently. Don't understand why markets react to U.S. economic data that always gets revised down. Well, because it's the only data we have at that point in time, and we're trying to read where the economy's going. Nasdaq just cracked lows, actually broke lows. Yeah, algorithm's effective for sure. I don't think all the longs got flushed out of Bitcoin. I think there's a bunch of longs, bro. Alright, don't we have data at 10 a.m. today too? Hold on, let me see. Got jobless claims is out. We got existing home sales at 10. Figma? I think IPO'd recently, right? Wasn't it FIG symbol? Yeah. It's down a lot from. This is why I don't play IPOs, bro. Figma was hyped too. Nasdaq's still dropping. This is why I don't play IPOs. I've been trading for years and years. I've gotten stuck in these before. It might go back higher, don't get me wrong. Right? But this thing IPO'd way up here at $80 to $140 a share on opening day. And then it dropped all the way down to 50 over the next month. It's just risky for IPOs. I bought Coinbase IPO at like wild prices. It never held. It took years to come back. It was just, I don't buy IPOs anymore. Yeah, PCE inflation tomorrow. Again, guys, PCE inflation data, incredibly relevant tomorrow. We will stream it live as we always do tomorrow. Very, very important. Inflation data got a lot of people talking. So it's just relevant. I think AI improvement will eventually slow down, and AI gets stuck somewhere in the middle of being very useful, studying constant information is thrown into a nasty bubble. I disagree, Saza. I mean, I think eventually it'll slow down, of course, but I think you have to look at how good it's getting, how good it was then, how much better it's gotten now, and if you extrapolate that over a 10-year period, you know, it's gonna be powerful. It's gonna be incredibly useful in 10 years. I think it's got to the point now where you can speak to it like a person and it'll talk back like a person. Like I called, who was it the other day? We called some company about something, and the person started talking, and they were talking to us, and the only way we could really tell that it was AI was that there was a slight pause between every response. But AI talked to us through that call. And so that's picking up more and more. And yeah, it's going to affect jobs. It's already affecting jobs. But I think it's going to continue to get better. How much better, we don't know. But I think in a 10, 20 year period, it's going to be crazy good. Scary good. Yeah, I think Powell was more hawkish Tuesday than a lot of people expected him to be. Probably not. Regarding gold and the 10 a.m. data, probably not. Existing home sales, it might slightly affect gold. Not gonna. Hey guys, we got 17 minutes open. Are we gonna stop dropping right now? I almost want to buy this up right now, but it's a risky thing. We'll try it, I guess. We're already green on the day. We got a fairly large cushion, so we can do this effectively here. I'm gonna add. We bounce back over 50 and hold. If not, I'll just cut it. I think we've already dropped a lot this morning prior to this data coming out, and then the data came out and we're dropping even. And so maybe we can find a bottom here, but I'm not gonna take 3 and max. That's it. Testing lows of the again a day. Unless the testing lows of the day again. I don't want to get stuck in another low of the day test here though, so I'll probably cut this pretty. I'd love to bounce right here, but I'll wait. Better. Bounce. Nice. Okay. Hey. Oh, dude, I accidentally just jumped out of the whole position. No, I want to buy back in. It's too late now. Ah. Mismanagement. Managed it wrong. We were green. Get out there. Limit orders are back to working, by the way, guys, on Top Step. Work for me. So we ended a green there. I could have held, though. It's not really scared. I'm just kind of scalping these moves today. I think I've been doing this all morning. I'm pretty green on the day. I think you have to fear markets a little bit. But again, so after last week's 25 basis point cut, Moran pushed for faster easing. 3.8% versus 3.3%. Again, yields are spiking on GDP data and being way higher than expected. Goolsby spoke a lot this morning. So did Moran. Or stock discounts. Yeah. Slightly red on the day in my portfolio, but got about 15,000 in treasury bills right now. What are they paying? 5%. Google asks the U.S. Supreme Court to put on hold key parts of judicial order that would force it to make sweeping reforms to its App Play Store, according to the company. Create money, it's not needed. What should we use instead? Goods? Trade goods? realistically, we should have never gotten off the gold standard and the precious metal standard for coins and money, you know. Accenture says the H-1B visa policy would impact would be limited. Oil falling. Could have held that long. Yeah, the real problem that we're experiencing modern age is this. Is that, you know, the quarters used to be made of silver, clarify, right? Like actual silver. And this was changed in 1964. So the use of silver in quarters was discontinued in 65 due to the increase in cost of silver. It led to the introduction of less expensive copper, nickel-clad composition for coins. It took us off the precious metal standard. And so if we would have kept silver in quarters, the inflation that we would have now wouldn't be nearly as significant, but would have kept up with the rise of precious metals. And that is why we have so much inflation in modern age, is because we got off the precious metal standards for money. Where we used to have a standard of it, and now we don't. Now, you know, and that is why we've had so much. That's why inflation is much more significant. That's why people are much more widely affected by it. Now your money's not backed by precious metals anymore. All right, guys, NASDAQ did rebound here. One of the things that you'll see in a downward trend, right, that I always like to target is like you'll get big extension, and then you'll get like it might continue in that trend slightly, but it's kind of choppy, right? Or it might trend sideways. That's a sign that we might get what we're getting right now, which is a bounce. That's why I wanted to stay in that position. I wanted to take one contract off. I ended up taking the whole position, unfortunately. But it's all right. Let's get up to 400 likes if we can. We got 337 that I show right now. Yeah, but the dollar used to be backed by gold as well. So like that standard just changed too. All right, we're at 585s right now, 585s. Yeah. Yeah, I mean, I think we already virtually are cashless. I don't think almost nobody uses cash anymore. And I'm not like, gold is good, but like people always act like if stuff hits the fan that gold's gonna be some valuable currency. Gold's a shiny rock, bro. You know, stuff hits the fan, nobody's gonna care about gold. They're gonna care about food and other stuff. I always laugh at that. They're like, oh, if stuff hits the fan, buying gold. It's like, okay, you buy a bunch of shiny rocks, cool, bro. You know, silver actually has a little bit more use in technology. I'm not saying no precious metals or metals in general are going to be useful, but yeah, gold's valuable. It's always been the long-term inflation hedge for a long time. Some people would argue Bitcoin and crypto are moving towards that now, and that might be true. But yeah, Bitcoin, what it has, crypto has a utility argument. You can send money anywhere pretty easily right now. Again, PC inflation data tomorrow are going to be very relevant. No, for sure. I mean, gold, I like gold. I think gold has been a really high performing asset for a long time. I'm not hating on gold. I'm just talking about a very specific situation that people like to argue gold for. And I think they're wrong about that situation. China is almost completely cashless. Yeah, I mean, the US is almost completely cashless. For most people here, answer this question. When was the last time you used cash to pay a majority of that day's transactions? For me, the last time I used strictly cash was years. Hell, I don't even bring my wallet half the time, you know? Because you can buy stuff with your phone, you know. So cash. I know we're gonna get everybody trying to argue for cash. Listen, we are obviously in a pretty much cashless society here. Virtually nobody uses cash anymore. And again, there's always outliers, but in general, people don't use cash. They use cards and transactions, online transactions. And I also think there's a negative stigma for cash right now. I think if you try to pay like a big transaction in cash, people are going to be like, oh. They're going to look at you with skeptical eyes and say, where did this money come from, right? Like, there's a negative stigma with cash even, especially large purchases of cash right now. So we're already virtually cashless. Regardless of whether people want that to be the truth or not, the world's mostly cashless right now. Tips are kind of the final holdout with cash. Like, I'll still tip with cash if I can. I don't know what the market does at the opening bell. I really genuinely don't know. Check, bro. I don't even use checks. I don't want to give anybody my bank account and routing numbers. I'm good. Why would I do that? Rather not. All right, we're under 575s again right now. Rejected at that 585 level we have on the chart. Dollar index is up on the more hawkish, restrictive data. Stronger economy. Gold is elevated. VIX is pulling back some though as the market rebounds. All right, here we go, guys. Opening bell in 3 minutes here. Right, exactly, PPU. I never understood checks. Every time I sign up with another bank account, they're like, do you want a checkbook? I always tell them no. Y'all live in a bubble? I don't necessarily think so. I think most of the time, I think most people rarely use cash these days, right? There's outlier cities and towns, and you know, again, generally the older population will use cash more than people who grew up digitally in different areas of finance and transactions. But in general, I would say most people use digital transactions and much more heavily than cash. I'm not saying cash is 0%. I'm saying it's at least probably, I would say, 80-20 cash, maybe less, probably less, right? Realistically, what do you guys think the percentage of people that uses digital transactions versus cash transactions? What do you think that ratio is? I would say it's a little bit worse than 80-20. It's probably like 85-15, maybe. 85% of people use digital transactions of some sort, whether it's a bank card, credit card, application, Apple Pay, Android Pay, whatever. And maybe 15% of people try to use cash regularly. All right, here we go. 1 minute, guys, until the opening bell. I would say in the 30 largest GDP countries in the world, Sam is probably I'm going to go with. That's probably a good idea, pawn, though. Use cash. It'll kind of... They say the same thing about a debit card. Yeah. Credit card is just, you know... Credit card's not real money, you know? They'll say. Debit card, it hurts a little bit more when you spend it. I saw an article about that, actually, yesterday. Alright, guys, here's the bell. Good luck. Hit the live button next to the play button. We'll see. Alright, there's the opening bell. NASDAQ down at the open. See if it holds. I'm watching gold. I'm watching the SPY. I'm watching the NQ. In 2025, cash accounted for about 14%. So it is at 85% of consumer payments. %, of all U.S. consumer payments by number in 2024. NASDAQ just cracked lows. We're down to 541s, 540s here on the NASDAQ. Still breaking down, following the trend of pre-market here with weakness. VIX is starting to creep up. Dollar index is probably going to go higher. Gold coming down with the NASDAQ here, but 525 seems like a level I'm watching. Cash accounted 14% of all U.S. consumers. 2024. NASDAQ broke lows, starting to rebound. The opening bell is very volatile, though. I'm going to wait at least 4 or 5 minutes. Play out. I'm waiting. I gotta wait 4 minutes. 4 minutes is my rule for the opening bell. I'm watching Nvidia pretty close here too. Watch like Apple. It's doing. Apple's been volatile. State of the economy really that bad? So GDP came in at 3.8% today versus 3.3% expected. Stronger than expected. Jobless claims showed up lower than expected at 218. So less people filed for unemployment and GDP was higher than expected today. So it showed a stronger economy, made yields spike. Higher interest rate sentiment is what it is. NASDAQ starting to bounce back here. Apple's still falling down though. Let's watch Nvidia. Kind of a choppy open though. Y'all be careful. I think the market's waiting for PCE inflation tomorrow. I think PCE inflation is big. I think the market is waiting for it tomorrow. Definitely red on the day. The market did not like this data either so far, but it doesn't mean much yet. Maybe markets start to run and we get some recovery bounces here. VIX is starting to fall a little bit, but market wants rate cuts, I think, generally. They see rate cuts as stimulative, and I think they also priced in after the last Fed meeting, you know, more rate cuts. And so now we're seeing that get priced out a little bit on stronger GDP and economic data, as well as Powell on Tuesday being a little bit more hawkish, restrictive, and less committive of rate cuts on Tuesday. And so I think markets, and since then, we've had 3 red days in a row as of now. 2 red days so far. If this one is red, it'll be the 3rd red day in a row since that retracement to a more hawkish stance by Powell, I would say. And that's kind of the story of the market. Just 525s. Too close to the bell for me to attack this level that I have on the chart right here, 525s. Apple and Nvidia start to flush at one. Here's a level. 24.5s right here. Definitely watching that. But again, I'm not going to trade against this trend right now. It's too weak. Price the VIX isn't with all this stuff going on. The dumpening. Remember, tomorrow we have PCE inflation data. I think the market's fearful of that. And I'm looking at 24.5 right here. Hold down a little bit here. There's 24.5s. We're just powering through these levels right now. We really are. Again, I've seen this a lot. Schmidt says there are many nuances in the balancing of the dual mandate, which is strong labor market and low inflation data. Dual mandate he's referencing. PCE data probably have a big influence over markets. You never know, but probably have a decent from PCE. I'm long gold a little bit here. We're up some already. I'll probably take the rest off here. Just kind of, I'm scalping the opening bell. I'm gonna just cut that right there. So show you that trade, but now we're gonna go back to the NASDAQ here. NASDAQ's just dumping down here. VIX is elevated, it's at 17.5s. Basically, Nvidia is falling down at under 170. Here's the pre-market low for Nvidia right here. So I think this is a big level to watch. Right where Nvidia is at now. Couldn't see a bounce, and we could see a big flush underneath. It's pretty close to the bell, but Bitcoin. Bitcoin's back up a little bit. It's at 111.5. Yeah, don't watch the economic data. Yeah, that's what I said. Like, I'm less trusting in my levels right now just because, like, this trend is so strong. Like, sometimes what you'll see is a break, a pullback, and then a rejection at, like, type of level here. Look maybe for that. But yeah, the levels just aren't holding today. Which means that we're getting deep momentum on the downside. Like, we're not really stopping. So, yeah, there's a reason I'm like, super in Q. Yeah, Nvidia just broke under the pre-market low. It now hit the low of the day, and it's starting to get a little bit of an exhaustion bounce, but it's hard to gauge the day today, guys. Y'all be careful. 10 minutes into the bell. Mid says I've been public that the balance sheet became oversized. So he's talking about Fed's balance sheet, and they're still doing QT on it. The closer the Fed is to hitting its mandate, policy becomes more surgical. As that crack lows for a second again, Nvidia started breaking down too, and the VIX is at basically 17.5s. You guys red or green on the day today? I'm green somehow. But NASDAQ is flushing here. Yeah, somehow I'm green. I don't know how. Still break it down. Let's watch 450. It's deep red though. Gold's flushing. VIX is high. Apple is starting to flush down. I think I took some off the target yesterday because it's down. I think I'm just gonna sit in target then. So there's, see, look at it just breaking under these levels. It might bounce at 17.5 here, but red is deep right now, guys. Brutal red. Y'all be careful. Got out of gold again. We've been basically scalping these little mini. Look at the NASDAQ. Guys, NASDAQ is brutally red right now. Brutally red. Last PC report. NASDAQ's still tumbling at almost 425s now. Has not stopped at all. VIX is at 1770s, almost 18. What's dropping right now, though? It's got to be from something here. Hold on, let me see. We're actually still green on our target position. Bro, Amazon is dumping down. It's at 218. But look at Amazon. Meta down. Google's down a little bit. Netflix is slightly red. Yeah, Amazon is probably one of the big red stocks. Tesla's down too. I'm not looking to catch this one. Good for me to. Yeah, we're actually up about 150 today trading. We've been scalping gold. If you want to look at my actual, mostly green on the day, and then amount of stuff. But Nasdaq's been red. Very, very red. Hard to attack this. I've extended on the downside, but definitely red momentum for sure right now. Yeah, I mean, this is the news panic, but tomorrow we got PCE inflation data. So I also think this data, if we get high inflation tomorrow, it's going to be much worse for rate cuts, right? And so I think the market is pricing in that potential, right? That makes sense, right? I think the market's pricing in like a potential for higher inflation data tomorrow, pushing back rate cut sentiment. Yeah. And again, if you want a one-stop shop, we cover all this stuff live every single day. We cover Powell, we cover GDP, we cover PCE data, we cover everything. If you want a one-stop shop for somebody that covers all of this stuff, subscribe, hit the notification bell. We appreciate the love. Yeah. Again, we got existing home sales in about 15 minutes. We'll cover that when it happens, but see what it looks like. And Bitcoin's been weak. VIX is finally starting to dip a little bit here. We'll see if we see a rebound in equities and stocks. Bitcoin down to under 111s right now for spot. Yeah, Bitcoin down to 110,785s right now. Yeah. And 110 is a big strike price psychological level. I think that makes sense regarding Bitcoin, and it's close. Nvidia rebounding back up a little bit, back up to almost 174.50. So is Amazon. Bitcoin's still falling though. I'm showing 110.7s for Bitcoin. What happened is we had GDP data showing stronger than expected earlier in the week. Powell was less likely to commit to rate cuts than he was the previous week during the Fed meeting the previous week. And we also had jobless claims show up lower than expected. Existing home sales just dropped. They showed up at 4 million versus expected 3.96 million. The new home sales existing home sales just came out a little bit early. They were supposed to drop in 15 minutes, but instead they dropped down 4 million versus 3.96 million, a little bit higher than expected for existing home sales. Bowman's also set to speak in 13 minutes. And oil just hit an intraday low. Still a little bit higher than it was a few days ago. Probably not going to be 29 again. Bitcoin bouncing back up, almost back up to 111s. I just made some more money on gold in the spike here. I've been scalping it, but you guys think if the neutral rate goes, if rates go down from what they are now, I would say 1%, 100 basis points. You guys think house prices will go up or down from it? You get arguments on both sides. I'm curious to see what other people think. Yeah, we got a bunch of Fed speakers today too, just to clarify. Just to put this into perspective, just today alone, guys, we got, I think Bowman speaks at 10 minutes. Oh no, we got John Williams at 10. We got Jeff Schmid at, no. Hold on. Yeah, we got Bowman speaking at 10. Barr speaking at 1. Lori Logan speaking at 1:40. Mary Daly speaking at 3:30. Okay, so guys, the reason the markets are going down today probably has to do with, it started, okay, look, and again, this is the story I see. I'm going to preface it with saying I'm not necessarily saying this is correct. The story I see right now is that markets are down since Powell spoke on Tuesday. The previous week prior to Tuesday, Powell did the Fed meeting, and Powell was pretty dovish. You know, willing to acknowledge weakness in labor reports and labor markets, willing to see recession fears as justifiable, a little bit more justifiable, still data dependent, cut rates 25 basis points, much more dovish than, you know, he was the previous Fed meeting. This caused originally a positive effect in markets. And then Tuesday he came out giving economic outlook earlier this week. And essentially what he said earlier this week was that the one rate cut we did the previous week was just a risk management cut. He wasn't going to commit to a broader easing cycle. He was more hawkish than expected, right? Since then, along with stronger economic data today, which more so justifies a hawkish stance, GDP 3.8 versus 3.3% in quarter two, jobless claims, which is a more real-time look at labor showing up lower, which means less people filed for unemployment, and it ultimately showed strength in the labor market. Since then, markets have negatively reacted. Now, a lot of this is backed by Nvidia, I think. If you look at Nvidia here, Nvidia's starting to rebound right now. Nvidia has climbed all the way back up to over 175, and I don't think it's a, you know, I think the NASDAQ has climbed back up too. So, but on a net effect of today here, kind of see markets are pretty down still, even with this recovery bounce that we're seeing right now. So, see what happens. That's the story I see. If you guys disagree with that story, essentially the market wants rate cuts, and Powell being hawkish and data showing strength means less rate cuts, and the market doesn't like that. Yeah, I think if we end QT on MBS as Tony, it'll help bring rates down, but in mortgages. But we're still doing QT, full QT that we were doing before. Like, QT is the reduction of the Fed's balance sheet through letting their current holdings like run off. Like, essentially they're not selling them directly, they're letting them expire, mature, whatever. So that would help mortgage rates come down, but I don't think they're planning to end QT until either much later this year or next year is what I've heard. You know, I don't think we should do QE. Personally, I don't think we have anywhere near the weakness that we need to justify QE, because QE, if the risks are inflation, QE is going to make it worse. But yeah, it also has to do with like the bond markets. All right, look at that big dump back down. We tapped this 525 level. See, this is what I said. Sometimes, like, if we blow through the levels originally, they can be little pivot points. Like, look here. Boom, rejection. Bounce here and then down, or just dump down. I don't know. We're getting close to these lows though. Yeah, well, inflation could actually help debt over time, and the logic of inflation helping debt is if you've got 37 trillion in debt, trillion, you got 37 trillion in debt. You have, let's just give a wild number of 7% inflation, right? Over 15 years, 1, 2, 3, 4, 5, 6, 7, 8, 9. 15, you're gonna, cut that by 70%. And so, yeah, 60, whatever, 66 points. But that's the point, is that you will reduce the debt from inflation. But inflation ain't good. I don't want inflation. So essentially, there's not really an easy path here. All right, we got 4.5 minutes left until 10 a.m. Existing home sales are already out. Nasdaq bouncing at that 450 level here. The momentum was brutal though. We had deep red, man. It was scary. All right, guys, we're very green on the day. So just to put like net green today, we are $238 in green today. Mostly attacking gold here, building up a cushion, and then swinging a little bit larger into gold. Sorry I didn't have it on screen, but that's what we're up on today. Again, if you want to see the full list of positions here, I can scroll a bit larger. Kind of see here's 1, 2, but we're green. Day starts. Yeah, so we have had we've had one losing trade today. Here, I think. That's a skipped one, so that's one. Today's the 25th. Yeah, I think that's right. Okay. Yeah, we've had one losing day today. This one was flat. Or one losing trade today. No. Everything else was green. Again, like I said, we're up about 238 right now. Good. Mostly on the long side on gold, believe it or not. I think gold is a little bit easier to predict bounces on. Nasdaq. Gold generally wants to rebound a lot of the time. A little bit easier to predict on. Gold's back up to 3760s. Because I'm scaling in and out of positions, Chris. So every individual trade scale is going to be small. I don't even claim to be some super good day trader. I'm not that at all. I don't want that type of pressure. I'd rather just tell people I'm top 3 worst ever. Don't copy me. Not an investment professional. Not liable if you lose money. Understand all the stuff on screen. With that said, If you want to check out Top Step, beautiful way to help support the channel. No PDT in futures. You can day trade the S&P, NASDAQ, Dow, Russell, gold, commodities. Patterns are very similar to blue chip stocks. You get started for 50 bucks. If you lose, you're out 50 bucks. It's not the end of the world. You pass it, get a funded account, 90% split. Get to keep your first 10K prior to that split kicking in. Best of both worlds, in my opinion. Great way to learn. Check them out. Here's the link. Again, I'm going to close this stream down. Remember, tomorrow we have PCE inflation. Tomorrow we have PCE inflation. And again, PCE inflation is very relevant. As soon as we close this stream, it's going to bring you to the PCE inflation stream. And so stick around on that channel if you want. Again, tomorrow PCE inflation's major. Again, be ready. As soon as we close the stream, it's going to bring you there. Stick around. Hit the subscribe button. Hit the notification bell. Listen, if you want a real-time alert into when we start our streams every day, tomorrow we will be streaming 8:30 Eastern Standard Time, PCE inflation. Be there, 8:30 Eastern Time. Tomorrow, expectations for PCE. Remember, core PCE is the most important one. It stands for the Personal Consumption Expenditure Index. Again, on Top Step, I'm biased because they pay me money. So I'm biased, just to clarify. But again, as soon as I close the stream, it'll bring you there. Y'all stick around. I'll see you guys over there. Be safe. See what happens tomorrow. Y'all be careful today. Markets are kind of crazy. See you guys over there. Y'all be good.